How's it going, everyone? It's Sam. Coinbase just absolutely killed their numbers for their earnings. Now, this is something that I kind of expected. I've been talking about this in the Patreon, and I gave everyone kind of a heads up. I thought they were going to destroy numbers, and they did. They doubled, almost tripled what analysts were expecting. And I want to break it down for you. I've skimmed through the investor presentation. I'm going to do more research, but I want to push this out to you, tell you what's happening. And there are some things that we have to take a look at, some negatives, which are causing it, I think, to be a little bit cautious moving up right now, because it is up 1% after hours. But there's something they put in there that makes, I think, maybe some of the big money a little bit more cautious about throwing in a lot more money. But they destroy numbers. Let's take a look. So they had a second quarter EPS of $6.42, $4.18 better than the analyst estimate of $2.24. So again, like 2.5 times what analysts were expecting. Revenue came in at $2.23 billion versus the estimate of $1.77 billion. Huge numbers. And I, again, guess this because Voyager killed numbers too, Voyager Digital. Now, let's break down these numbers a little bit more because they gave this investor presentation. And again, we'll hit on some of the highlights. So they had monthly transacting users up to 8.8 million, up 44% from Q1 2021. Kind of expected that because a lot of crypto boomed in April. Now they have verified users of 68 million. They now have over 9,000 institutions who continue to deepen and broaden their activities in the crypto economy. They generated $2 billion in net revenue, including $1.9 billion in transaction revenue and $100 million in subscription and services revenue, which we'll cover here in a second because it has grown a lot, even just since last quarter. Net income was $1.6 billion. Billion. So huge number here. Adjusted EBITDA was $1.1 billion. Now, the thing is, they break down these numbers here a little bit more. Again, it's just unbelievable when you start looking at some of these numbers because last quarter, people didn't think that they were going to be able to continue this. They actually projected lower net income this quarter than they did last quarter. And again, they had $1.6 billion as opposed to $771 million. So huge growth. Now, again, this comes with a caveat, which we'll explain here in a second. They go through a lot of information in here. This is about 20 pages, and they break down different parts of their business from the Coinbase card to blockchain rewards. They are very much developing their ecosystem here, but let's break down some of the actual finances here. Finances is the word I was looking for there. So total trading volume went up significantly. So 462 billion up from 335. Now this obviously helped them significantly. You can see the breakdown of crypto actually has moved away from Bitcoin a good amount into more Ethereum and into other crypto assets. This is the trading volume, but also we can see that more money is flowing out into those other assets, which we can see down here. You can see though, again, assets on platform, the institutional assets have gone down and retail has gone down. So that's not great. That's something that I think is holding them back a little bit. So it's gone down to 180 billion from 223. Now part of that might just be due to the fact that the whole cryptocurrency market has fallen down a significant amount from its highs. But we can still see the transaction revenue is going up. Subscription and services revenue also just about doubled. So it went from 56 million up to 102 million. That's a pretty significant increase, and this is going to have to increase to get over the fact that the transaction revenue is going to go down. That's something that I think everyone is really focused on. I think everyone knows that that will fall down. There's going to be a race to zero at some point. After they've grown and maybe they get years and years of huge net income, that's going to fall down at some point. But if we can grow this to enough, that is high margin. Now, obviously, if the transaction revenue is going up, but the assets overall are going down, that means that people are just trading more often. So in Q2, people traded a lot compared to Q1. Now, they do break this down a little bit more, talking about this, the subscriptions and everything, but we're gonna move down here. So they give their outlook. Now, in Q3, it's not looking great. They say in July their monthly trading volume was $57 billion. Now this is much lower than it was before. We can see up here. We can go back up here to the trading volume. 462 for Q2, so that's 150, 153, 154 actually every single month. It was almost a third of that. So that is not great. The transactions are definitely going down for this quarter. So that's not great so far. Also, like we said before, there are negatives because there's just less on the platform overall. Now, they say August was slightly better, but they expect volume in Q3 to be lower than Q2. Hopefully, though, the subscriptions and the other parts of the business can continue growing. We don't need to see another year like this, right? Or another quarter like this. We don't need another $6.40 worth of EPS to continue moving up. We need some stability, and we need a better outlook moving forward. And this can increase a lot. We're seeing kind of a crypto boom here anyways. Now they kind of give their MTU possible scenarios here. One other thing that I want to look at is how they actually made so much money. So their net income was so high, their bottom line was so high because they got a tax benefit of $737 million from tax deductions on stock-based compensation. So this was from their listing. On average, fully diluted share count in Q2 was 248 million. In Q2, adjusted EBITDA was 1.1 billion, and they ended with 4.4 billion in cash and cash equivalents. So this is something that is a little bit artificially high. We have to consider that moving forward, that really their revenue is not the same. It did go up a significant amount actually, but their adjusted EBITDA was pretty similar, right? Their adjusted EBITDA was pretty similar. Revenue went up, but net income shouldn't go up this dramatically, right? It shouldn't go up 2.5x when revenue went up just 20 or 30% here. So overall, they crushed earnings, fantastic earnings, but they are giving a little bit lower future guidance. So maybe not what exactly we wanted to see, but the fact is they did have major earnings. I mean, when you consider this, that if they could forward that out or push that out, that would be a huge amount of net income. I mean, that's $25 a share, $26 a share. So that would put them at a 10 price to earnings ratio. Now, this is not going to stay up. I wouldn't be surprised if we fell back down to where we were last quarter or even further down. It might be a rough quarter moving forward because their transaction revenue is going down. So there could be rough things ahead of them. That is what's holding them back now. But assuming crypto continues to trade well and they continue to grow out the other sides of their platform, I think this was a really good earnings. Now, of course, like I said, some are one-time things. Some of the money that they got was one time, but this still is good for Coinbase. Let's not act like an extra 1.6 billion in net income is going to hurt them by any means. Of course, we already knew that trading volumes were going down a little bit, so that's something to consider moving forward. Now, if this pushes up to 300 or 350, I'm not FOMOing in or anything like that, but I did add to my position over the last couple of days. Now, if you want to see that a little bit faster, you can check out the link down below to my Patreon. Also, check out Webull down below the video too if you want some free stocks, and they will allow you to trade after the market closes. Just deposit $100. Thank you guys, and I will see you in the next one. Bye.